Hello and welcome to Jupiter Futures. In this video, we will study the corn futures daily chart. For the benefit of a wider audience, we will use micro corn futures, which are the preferred instruments and recommended by us for a wide range of traders because of the better position size control they offer. And like we have seen corn futures for more than 15 years in trading. And the one thing that keeps corn futures different from many other futures is their continuous rotation between red and green days. Live example is in front of us. We had a green day yesterday and a red day today. It's almost like the reds and green days are on a rotating basis, alternating, never giving a follow up like a trader would expect, that a green day gives a follow on or a follow up with another green day. So this is where the corn futures differ significantly from, let us say, gold futures, Nasdaq futures, or natural gas futures. For example, where in natural gas futures, the once the trend is established, the tendency or a probability of a follow up is quite high. And here it is not so. So the way to trade is very much based on the trends and the moving averages or whatever indicators you're using, because on a day-to-day basis, if you get uh, struggling with the red and green candles that are coming, you would get stopped out very fast. If the stops are too fine, you would get stopped out, and many people do get stopped out in just the natural red green fluctuations of corn futures. And that's the main message of this video, that if you study the daily chart, you will realize that the reds and greens have almost no meaning in the corn futures daily chart. They can keep coming while the trend is in a given direction. So I urge you to focus on this 20-day EMA plot. This we have found to be quite useful. So as long as the corn futures are trading above the 20-day EMA, one should stay long, and price corrections can be used to buy and then can be used to sell on the next green day. So those kind of trades tend to work well, where you buy on a red day with a trend that is up like now, and then sell it on the next green day, which could be tomorrow, the day after, whatever. So those kind of small trades, buy on correction, sell on rally, don't wait for the rally to progress, because it doesn't often do that. So this kind of a trading strategy works very well in a corn futures market, which is not rallying away but mostly range bound, while the uptrend seems to be intact. And as we mentioned in the video yesterday, 427, which is the 20-day EMA, should be taken as a stop loss, and any closing below that will mean that no further long trade should be taken. And from that point onwards, only sell trades or short trades should be considered. And that's the broad strategy here. And if you see the support levels, it's worth noting that in the recent months of September and October, corn futures have taken support at 410, 410, and 415 multiple times. So you know that 410 level is a key support, and if prices fall there, you should see how they wait to react. They will invariably try to go back to their 20-day EMA once they fall back to their 410 level. So that could also be a buying opportunity, a tactical buying opportunity, if prices were to fall to 410 or 415. But yes, the main message I wanted to share was that you have to take one day at a time, and the red days and green days, they will keep oscillating even though the trend is up, and you should adjust your trading strategy according to that. If you are trading corn futures in an active way, then you can benefit from our trading signals for corn futures at Jupiter Futures. This is a commodity that we track actively, and if you are involved in corn futures as a business, a commodity trading business, or a farming business, then you can use these futures for protecting your gains and locking in the prices. You can contact us to learn more. Our website is jupiterfutures.com. Thank you very much.